Hey, it's Mack with PriceActionTradingSystem.com, and it's Monday. It's February the 8th. This will be our chart lesson for the day, and it was really all downhill today. We had a big sell-off during the overnight. Spike down is what I call this. This was like a spiking channel. We had a break here, a move to a new low, and then we kind of corrected. And then we had another trend that worked lower as well again. Um, Sometimes that happens. The market's just really weak, and then of course we found a bottom and rallied and had a huge rally back. But all this pretty much happened after by the time, after the 2 o'clock hour. So I didn't really mark any of it. But plenty of trades on the way down, plenty of opportunity, and just really good trading day. When I came in, we were really kind of going sideways at that point. We had this big spike down. And generally, when you have a big move down like that and you go into a trading range, or a big move up and you go into a trading range, when you break out successfully, you're usually going to go the same way you traded down. You traded into that trading range. And so we traded down into this one. So you'd expect us to be successful on the way out, on the bottom, on the way out. So I would call this your first move down, and I'd look for a measured move similar to that. And you can see we never really got that far. I mean, we would have had to really trade. I don't think there was enough time to get that far with this angle. That's a pretty strong move. This actually from high to low was a 60 plus point move. So I think trying to get down here would have probably been another maybe 20 points almost. So would have been a huge day sell off. But anyway, there was lots of trading opportunities today, and we'll back out here and show them to you. Get on out where it's a little bit bigger. But yeah, you can see we traded down here. There's actually a short-term trend line here. You can see we got the break, moved to a new low. It's just a little short-term channel here. I wouldn't really necessarily call it short-term, but it's compared to the day, it's just a trend, which we got a break, a new low, and really what it is just too steep, and we just kind of go into a much less steep two-tiered channel that holds for most of the day. We actually didn't get the break we actually got the break late morning, and then made a new low by late evening, and then we kind of had this trend up, recovery up, and then we sold off again. So, but let's talk about the trades. You can see we had the break here, and we just kind of we did make a new low here, but we were kind of going sideways, and there's some support right across there. And notice you got this little channel working from one side to the other, and you get the close outside right here, move to a new low, and it reverses. So there's a couple of different reasons to like this long. First, it's a failed break lower, which generally is going to snap back at least to the EMA and maybe to the other side of the channel. And that's what happens here. You also had your reason to consider it going higher because you had your close outside and a new low. So you had what you needed to get a reversal here. And again, we traded down into this, so you wouldn't necessarily expect prices to rally from here, although they could. I mean, nothing's ever written in stone. We just know what the biases are, and we stick to the biases, and we're going to be right most of the time. So and then of course we trade back up, and where do we find resistance? Right at the original highs here. You can see that, and prices turn lower. And that's a second entry short. Notice the new low. You're coming back. First entry, pull back second entry. But you also got to move outside. You didn't get a close outside on this one. Even if you adjust this slightly, you really never get a close outside. But we start trading outside. The main thing is you turn down off the high. I mean, that's a nice bearish reversal bar. Just go short there. And then you're coming back, and you get a second entry short right here. Notice this bar, this little small bar, it broke higher first and then turned, just be ready to go short when it breaks out the other side. Have your stop there. Or you could wait on this one to close and even put a stop right there, and off it goes. Because you're looking for prices to come back down here. This time we just kept going lower. And of course, draw your trend line off those first couple swings there. Just to, I mean, you don't know if it's going to be valid, but if you draw that and drag it down, it fits really well here. You can see that. We do push a little lower here, but you can see that it's kind of holding right there, and you just have to kind of see what it does the rest of the way. But when we bounce there again right here, then you know it's, and then of course you'll be ready for that one when it comes back in this one. So even if you couldn't really trade this one off a trend line because you didn't have it yet. It's doubtful you're going to find that off this low and bring it up and make it work. So that's your first chance to trade it on your third touch, your confirmation, and then your setup. So, but you're heading lower. And if you caught this trade right here, you get runners off this. You would have had some runners off this one or this one. And you can ride that down. You couldn't have ride this one all day, but that's a nice move right there. And if you look at it, you know, that's a 10-point move almost. So you should be able to get something out of that. Be looking to exit when it hits the lower side. And it does bounce here. Your trend up doesn't really start till right here. And it could be that it's a little bit lower, like so. I never really drew it off the top. Didn't matter because it turned down off of the trend line. So yeah, that looks a lot better right there. It's probably more realistic. But you do get a close outside depending on how you drew it. It didn't matter because you turned down right here where you're looking for prices to turn down. That is a key entry point, and you get a big bearish bar. I really don't like that signal bar, but you can't argue with this one. Just go short right there, and then it pulls back. This is not a perfect signal bar here. This one really should have been green. I forgot to change it. And but you're looking for prices to head to the other side again. And you got a trend line moving down. That's your first break outside. And it's kind of a little breakout pullback short. And this is a shorter term trend line right there. And there's probably one a little more longer term right there. And you can see that one. And then you get a little close outside there to move to a new low. So this one does fit pretty good. I always start them off the first few bars because there's shorter term trend channels and there's longer term ones. And a lot of your shorter term ones, if you draw them off those first few bars using the closes, they usually work out pretty good. And if I have time when we get done, I'll talk about that some, because I had a conversation on one of the recent videos with a guy that says you can't find the trend line off the first few bars, and you really can often, especially like these that are kind of jumbled. If you draw that off those first few trend bars right there, even if you only had those first few, you can see that's fairly easy to draw that off those closes right there, and it bounces right off of it there. And so you can find this. It doesn't always work out perfect. It doesn't always. There's another one off the first few bars, and it's a good short-term trend line. You get your break and move to a new low. And we'll come back and talk about that if we have time. But anyway, that one was green, and then we're pulling down. Then you get your failed second entry long. You got two measured legs down. You're not to the low. It tries to go higher. It breaks out the top here and turns and goes. Just have your stop right there. Again, this was at the low of the day, so you got to be a little careful. But this is a strong sell-off, and even though that one's close, I like that one because it's the trap, and you're probably headed down to this low side. So that's exactly where it goes. And it bounces almost to the tick. Then we're moving higher. And at this point, you can't be going long anymore because you got a strong downtrend and you got a sure channel here. So just wait on your shorts at the key entry points. And notice you got one leg up. There's a couple of moves in that leg correction, another leg up. And so that's two legs up. On a bigger picture, you'd have a second entry, but it doesn't matter. It comes right off that key entry point, that main trend line. And again, it broke higher above this bar first and turned and went out the other side. Just go short right there. When it breaks higher and starts backing up, put your sell stop right there just in case. If it doesn't trigger, then no harm, no foul. But it would have triggered, and look at it, quick and off to the races. And many runners would have been safe here. And then you get a two-legged pullback. This makes a new low, but this is still a two legs back to the EMA. It's also a second, notice counting from the high, pullback first entry, pullback second entry. It's also a failed second entry long. Big bearish bar, go short there. And again, you're looking for it to come all the way down, but we end up getting a reversal here. We didn't quite make it down, so what does that mean when we come back? We're probably going to overshoot it by that same amount, most likely. You can see we kind of overshot it by that same amount. And notice this, that we started having this trend line here. That's the same angle, same identical bar. We just move it up a little bit. And notice what happens here. We're moving down. You got a new swing low. It's lower than that one. So you pull back first entry, pull back second entry. There's a second entry short. That's the reason I like that one. It's right off that trend line. We still haven't made a new low in a market that's been selling off this strongly. We're going to make a new low. You just got to find the right time to enter. So you go short there. And it doesn't go very far. It comes back again. It still goes lower, and then it comes back yet again. At this point, you have to get a little bit concerned about this support across here, so you really don't want to enter anymore. However, the fact that we're making lower highs here every single time, that's a strong indication that we're probably going to go lower. Do you want to trade right into that support? Probably not still. But there's times when I will take that trade, even if it's into that support, because you're making lower highs every time. So every time the market tries to go higher, it's losing steam. Eventually, it's going to break lower. Sometimes I would take that trade. I didn't today because there's so many other good trades. Don't risk it. Wait and see if you get a breakout pullback short, and you do. You break lower, you pull back, you test. And you get a big bearish bar, just go short there, and that one's off to the races. Again, you don't get a runner here if you're moving your stop to break even plus to break even because notice it comes right back to that. And people ask me that a lot. Let me just talk about that real quick since we're on to it. But you don't have to move your stop to break even. You can move it to break even for the trade. So if you entered right here, then it would be 4 ticks back. And if you went 4 ticks back, you may not get stopped out. Or you might make it break even +1, so you at least get 1 tick that'll pay for your commission so you don't lose anything. It's just basically a wash on that second trade. Actually, you'll make a couple of bucks, I think, off of it, depending on what your commissions are. You'll still make 8 or 10 bucks, I think. But anyway, then we kind of go sideways here. It's right where that previous support was. I don't like entering there. We do get a double test of that trying to come back, that breakout right there. But you got to go low at the very low of the day here, and we've already had a break of the two-tiered channel and a new low, so I just don't think it's worth it. It's tempting right there, and it would have worked, but you just got to skip that. And guess what? Then you get a reversal. If you got a really good setup here, I might have said even go long there. But you're waiting on that reversal pattern. And notice how it pushes through the EMA. Notice the new low. You pull back. You got a first entry. You pull back. You get that failed second entry. You push through the EMA. You bounce off of it. I like that one. Turns out it doesn't get you anything but a scalp. And then we're going sideways again. And this trend line's holding again. So you got to be careful going short. But notice this little reversal coming up, the break, the new high, and so you got a reason to go short. So when you get that second entry short right off that line, I like that one, but it didn't go very far, but it does come back, and it almost looks like a repeat of what we had up here. You get a big bearish reversal bar. You got plenty of room to get out. I like that one, and that turns out to be a fairly nice move. I forget how many points it was, but that's a 5-point move right there. So if you caught and you would have caught a runner, depending on how you managed it, uh, you should have gotten a couple of points out of that runner. And then of course we bounce right here. And there's actually, um, notice we're moving up. There's actually, notice the new low pullback first entry, pullback second entry. There is a failed second entry short there, but we've moved outside this shorter term trend line, and this has been a really strong down day. So I think you just had to sit tight right there. And this is actually supposed to be blue. I forgot to change it. But notice what happens here. You got to be careful going short, and really this one could almost be green, because by the time you get the failed second entry short there, or the multiple fails shorter and bounce and go higher, you've been going sideways and there's a lot of bars stacked up there. So this one really is almost could be green. It did break out the lower side and then break out the other on the way up. We're looking for prices to possibly reverse as well. So, but this is another one of those short term ones where look, if you just drew it off those first few bars, and we usually use the closes on those. And notice if you did that, you catch this line all the way up. So it would have given you that line with only a few bars. And because we had a break and we're just kind of going still sideways, I think you just kind of got to wait and see what happens. And then notice you get a failed second entry long here. Notice the new high, pull back first entry, pull back second entry, and it actually breaks higher here and turns and goes up straight out the other side. When you see that happen, generally you know you got people trapped when it's going one way and quickly reverses and goes the other way. Once it breaks higher and starts turning down, go ahead and put your sell stop right there, just in case. If it ends up going higher, then you just cancel the order. But if it feels it, look what happens. And you would have caught a runner on this one, and then it pulls back again. And also notice that trend line off those first two swings, and this is the confirmation of it. And originally I had this a little lower, and it still looks valid there either way, because generally I draw it right off the closes, and there your first two swings, the closes are right there. We still didn't get back to it there, and it still holds. So it doesn't really change anything. You still get your break at the same place, close outside your new low. So it didn't matter how you drew it, but if you drag it down, it fits perfectly down here. So you know you got the angle right. It's just a matter of where it's at up here. But I ended up moving it a little higher, and it fits really well either way. You still get the same thing, and that's another thing. Your trend lines don't always have to be exact, but they got to be close. And if you know, but you can be close and still be close enough to get it, come up with the same conclusion. So they don't have to be 100% right. And early on, I would have drawn this one off those first few bars there. And you can see there's a short-term trend line, a break, a new low. We didn't quite make a new low, but it tried, and then it bounces here before it turns back down. It gives you a trap. So, you know, always draw those short-term ones to begin with, because they help a lot as well. And this turns out to be, and this is a breakout pullback short from this congestion here. And it went higher again, and then turns out the bottom side. Look at it go. And you would have caught a runner here. So if you just caught this one trade with a runner, and you ride it till you get a break, a close outside and a bar that goes higher, that's going to be right here, 10 points. And if you went all the way, yeah, never mind. You could have got 10 points anyway. But if you'd have just taken it to where it bounced down here below this failed break, I probably would have exited there, or maybe right in here. But either way, you know, you get 8 or 10 points out of that runner. And then it comes down here and you get a bounce. And again, there's a short-term trend line right here, drawing it off those first few bars, those closes. And look what happens. You get a close outside, a move to a new high, and it reverses right off the trend line. That's a second entry short. Go short right there. And that's another nice move. And then you do make a new low here, but you bounce early. So what is that usually telling you? Hey, we may get an overshoot here, and we do. You really don't ever get a good setup here. It moves to a new low and then it reverses, and then it's all uphill the rest of the day. And you really don't get. Um, there's actually a failed second entry short right here, so when it went higher, you could have gone long right there. It's right before the 2 o'clock hour. I'll go ahead and mark it because that's your reversal pattern you're looking for. And somebody asked me to describe what a reversal is, and it's just basically what happens is you push through the EMA, then you pull back, and usually you get a failed second entry short somewhere, and that leads to a trap that goes the other way. And notice that new low, you're going higher. There's your first entry, then you pull back, and then there's your second entry when it broke lower right there and it failed. So just have you a buy stop right there, and it goes higher right there. And if you didn't, when you see that bar, definitely put one there and look at it go. And notice you got a little double bottom there. So, but this is after 2 o'clock, so it doesn't really matter, but it gives you another little trap right there, but you got to go long right into that double top. I don't really like that, but it's after 2 o'clock anyway. So really good trading day. But just going back to what I was telling you about using the first few bars, generally the rule is we're using the first couple of swings, and every time you see two swings, draw your line, and then if that doesn't turn out to be your low swing, then draw it off the next two. A good example of that would have been right here. You might have started drawing it right across those two swings, but when it went higher than that, then draw it off the next two like that right there, and then you get that line. But also, the gentleman I was talking with was saying you couldn't find the line off the first three bars. He basically was indicating that it was some kind of, just, from experience that, I was doing that and finding that. But you can see if you just draw it off those closes on those first few bars right there, that gives you that trend line right there. It's a short term one, but you never know. Here you got those first three right there. The third one confirms that would have given you that trend line all the way down. So it can be done. It's not always 100%, and you may have to adjust it just a little, but you would be surprised how many times you can find that off those first few bars. And the ones that really work well are when they're kind of stacked up like that right there. And you're like so. That will generally that's when they're the best. And like that one right there, if you draw it off those first couple of swings, those are two real close swings. And you can see all you needed was those closes right there. And if you draw that, it comes into play later on. It's pretty simple. You might have even wanted to draw it a little flatter, like so. So it doesn't matter how you drew it, it still worked. You were close. But generally, you come off the low and you use the closes like so. And that would have given you a close outside here, a new high. And just to verify it, move it to the other side, and you can see it's fitting real nicely there. We kind of had an overshoot before we had the break, and that's what you like. And I can show you examples of that over and over. Here's one of those where you get the three closes. And, you would have just maybe had that right there. If you draw it off those closes, let's use and of course I've seen it, so I already know what it's going to do. But if you draw it off those closes, you can see that gave you the trend line all the way down till you got a close outside here, and then we moved to a new low. Turns out there's a lot more to that one, but that gave you this shorter term one right here. You really kind of got a close outside there and a move to a new high, and then we made a new low, and then we corrected. And generally your correction is going to be last about an hour, and that may, when I say a correction, it could be a reversal, or it might just be like this. The market just kind of goes sideways. But if you look, we started correcting. I'd say we started going higher right here about 9 o'clock. We didn't start going lower we really didn't start making newer lows till 9:30. So that one didn't quite last an hour, but generally they'll last a minimum of an hour. That one only lasted about 30 or 40 minutes. So generally you're going to get about an hour's worth of correction. But this was a real strong sell-off, you can see there. And then you had another little correction here and continue to go lower and lower. But anyway, hopefully you see the point there, and you can use those first couple of bars, and you may have to adjust it sometimes. You may be off a little bit. You may have to adjust it, but it gives you the basic idea early. And a lot of times, not only that, you can find it off the other side. So we able to do that quite often. You might draw it off the first few bars, first couple of swings off the upper side to find the lower side. Or if you're going up, you'd find it off this side and then drag it over. Or if you're coming down, you'd find it off this side and drag it over. And hopefully that makes sense. I don't see any real good examples of it here so far. Just not any real good examples today. No, I don't see one. Well, you might have. No, there's just not any today. But that's a neat little trick when you can do that. Draw it off one side and drag it down to the other on the way up, or if it's coming down, you draw it off the bottom and drag it up. So, all right, well, that's pretty much it for today. Really good trading day, lots of trades. Back out and show you the bigger picture again. But again, this is what we call a spike in a channel, and lots of good trades in here. Turned out to be a nice day. So, but anyway, I'm going to wrap it up, and we'll be back again and do it tomorrow. This is Mack with PriceActionTradingSystem.com, and we'll see you next time.